morning. Welcome to CurrencyChange Daily Foreign Exchange Report on Thursday, the 10th of October 2013. My name is Laurent Guilbaud, Managing Director at CurrencyChange.com, low-cost solution for your international payment where you can open an account for free with us and no obligation to exchange. The dollar recovery yesterday has been attributed to the announcement of Yellen as the next Fed chairman, but it could also be justified by declining market concerns about the US situation at the moment. Yellen says Fed can and must safeguard the financial system. If confirmed, she will do almost everything to promote maximum employment, stable prices and stable financial system, which means continuity with bad anarchy. There seems to be a low probability that no solution will be found on the debt ceiling before the 17th of October, following pressure from China, Japan, and on the US government. There is a memo currently circulating that US government won't actually default on its debt if the debt ceiling isn't raised. The source is the Washington Post. The FOMC minutes released last night provided little clarity, but the very limited mention of the potential fiscal problem suggests scope for tapering is less clear than it was at the time of the last meeting. At CurrencyChange, we expect this beginning of tapering, less quantitative easing, to happen as of January. In Europe, we had yesterday German industrial production data, which was slightly better than expected. But it didn't move the euro higher at all due to US dollar strength. ECB's CUR declared that current main rates give scope for further cuts. ECB can support solvency of prolificate sovereigns. ECB can build up capital of banks. In the UK, we had yesterday a weak UK production data, which triggered sharp sterling losses. We would still expect sterling to be well supported in most scenarios in the future, even though there is still some potential for some short-term weakness that we currently see. Today we'll have at midday the Bank of England MPC policy announcements. We should see some forward guidance framework as usual. And they should show little change in policy. Mark Carney said interest rate would be kept low until the jobless rate had fallen below the 7% mark. Recent comments from MPC member suggest there is no need for further QE, but there remains broad support for forward guidance. Despite yesterday weak industrial activity report, Q3 GDP is expected to be as firm as Q2, even higher. In terms of live exchange rates, we're currently on sterling dollar at 159.36, strongly lower. Sterling euro 118 lower also. Euro dollar turned lower yesterday, 135.05. Sterling Australian dollar 169.20. Sterling New Zealand dollar 193.30. In terms of economic agenda for today, with UK time, we'll have at 12 o'clock the Bank of England interest rate decision, expected unchanged, and at 1:30 US dollar initial weekly jobless claim expected at 310 versus 308 last week. Nothing major then. If you require further information, visit now CurrencyChange.com or contact us on +44 0207 373 2686. Have a nice day.